Hello traders. In this video we are going to show you how important it is to adapt to market change and never miss a trade. Market are changing constantly and we must do the same thing, following these changes and update our setups. Happen often that price approach so close to entry level but fail to touch and trigger the trade. I bet this happened to you before and will happen again, but with his technique and mentality, you will have less missed trades and more profitable ones. We are going to concretize that with two setups shared on Premium Telegram channel. The first setup was New Zealand dollar, Canadian dollar. First, we are drawing a support and resistance level. At this level we have a supply zone. We have two confluences that make this level very attractive for potential sell trade. We are highlighting the demand zone located at the bottom. As we see price approach the demand but didn't touched and price bounced. In this stage the curve that we chasing is from supply to demand zone. We had a potential AB equals CD pattern that completed supply zone. Our initial scenario in this setup was sell trade at supply zone. This setup has great risk-reward ratio and worthwhile to take it. Price continued in upside direction, approached very close, but failed to touch this supply zone, and dropped sharply in downside direction. Eventually, we didn't profit from this move, but as I always said, market always give us new opportunity. Our goal is to wait, nothing more, nothing less. Price touched the demand zone at the bottom, and we expected a pullback from this zone caused from the buy pressure. Price create a new supply zone. Our goal is the same as previous scenario, looking for sell trade at this zone. This pattern here is also a double top continuation. Make sure to like and subscribe. This encourages us to make more helpful videos. These patterns are created during a strong trend. In our case is a double top in a downtrend. Here we have the illustration of this pattern. They happen very often and are profitable, in some cases more than classic reversal double top pattern. These are two types of double tops next to each other, and you can see the visual difference. Let's turn to our setup. As I mentioned, our goal is to enter a sell trade at new supply zone. We are highlighting the current structure of the market with simple lines for you to understand better. We are marking the key zones. The red arrow it's our potential curve that we expect from market. We put our trade respecting the structure. The stop loss above the supply zone and take profit at demand zone. We are going to put these levels to our candlestick chart. This setup has higher risk-reward ratio that varies from 2 to 3. This fulfill our risk-reward requirement. Price pullback exactly at supply zone and dropped sharply in downside direction. The conclusion, even though we missed the entry at first supply zone, market gave us again new opportunity and played perfectly. If you want to learn more about our strategy and be part of our premium channel, we offer a mentorship program. Check the link on the description to find more information. Next setup is Euro US dollar. On daily time frame we had an AB equals CD pattern fully completed. The D point of completion correlates with the point of control of the actual chart frame. This level is the most traded level in this period of time and can serve as support or resistance because the market is very sensitive when touch these levels. This is exactly what we have here. After the touch of this level the price jumps sharply. We shift on lower time frame in search for potential entry level. This is the situation that we found on 1-hour chart. We are highlighting a fresh supply zone. We do the same thing with the demand zone. This is a rally, base, rally, demand type. We are highlighting another supply zone above the previous one. Based on the price structure, we are defining the potential price direction. We expect the pullback to happen after touch of first supply, and then at demand zone, we are going to look for potential buy scenario. Target is the second supply zone. We are highlighting the structure with simple lines, as we did on the previous example. I will suggest to do the same if you're trying to learn new strategies. This will help you to define the zones that has the most potential. Defining the structure, it's very important and will save you a lot of money, trust me on that. Price reached the supply zone exactly as predicted. There we have a lot of sell pressure that could cause the pullback. This is exactly what happened. Price continued smoothly to pull back in downside direction. Our entry level was at demand zone. Price approached very closely but didn't touch it. The same as previous setup. The market will trick us very often, and our job is not to lose the concentration, because the market will always give you new opportunity. The first thing that we are going to do is to reevaluate again our setup and look for new entry level. We are drawing a support level. If price pullbacks, it's good level to enter long. The target remains the same, the second supply zone. The stop loss is recommended at least below the lower of the structure, or the conservative and safe one, below the demand zone. Both scenarios could offer us a good risk-reward trade. This time, price pullback at entry level perfectly and bounced in upside direction, reaching the second supply zone, our target.